This is Nate Dodson, and you're tuning into And This Is Why, the podcast show. A show where we help you take your business to the next level. New episodes every week streaming on your favorite streaming platforms. Enjoy today's episodes. Hey guys, thanks for checking in for this episode of And This Is Why. Today we're talking to really an amazing entrepreneur. Not just an entrepreneur, a physician, a deal maker, a fund manager, and has built a massive team selling everything across the board on Amazon. It's just kind of, I don't even know how he accomplishes it all, but we're going to be talking to Dr. Amir Baloch and really some amazing stuff that he's been doing. And we've worked together for over a dozen years on all kinds of different projects. So let's talk about what's successful now, what has worked in the past, and what will work for you in the future. Thanks for showing up today. Really appreciate you being here.
Yeah, no problem. Awesome to be here.
Most people, I don't think, really even believe me when I say this guy who is raising capital, closing real estate, doing venture capital, doing, I don't even know everything that you're doing, but you're also a physician.
Right.
Like, this is an insane path. Could you, I gave kind of the high level. Who are you, Superman?
Well, I think I'm just really highly motivated, and I surround myself with other people that are like me as well. So, Tony Robbins said, it's really hard or people underestimate what they can do in a year, but they underestimate what they could do over a lifetime, over 20 years. So a lot of things you mentioned, I started back in the year 2000, 2001, and now it's 2023, so I better have something to show for this, right? So that's how I think about it. But I think one key thing is surrounding yourself with other people that are really focused on personal growth and business growth and adding value to everybody's life. And I learned from so many people, and I just put into action what I've learned from them. So that's kind of how everything got started.
I think that that's an amazing thing to say. And it's like that classic statistic that you are the sum of the 6 people that you're closest
That's
to.
it. That is so it right there. I mean, so you mentioned that I'm an anesthesiologist. I'm a doctor, basically very, very part-time right now. But one thing I had to do in order to grow was not be around doctors all the time, because sometimes that's their main gig. We're the people that are doing multiple things, or who are the people that are top of the game in real estate. It's probably not going to be a doctor. So I can't learn from another doctor because of that, for the most part. So things like that, you have to associate yourself with who's already been there, done that in the different industries that you want to be in. And I have multiple industries I want to be in, which means I got to surround myself with multiple networks. And that's really been a game changer for me.
One of our favorite clients, Grant Cardone, he has a saying, your net worth is your network.
Yeah. That's totally it. And when some people are struggling, I just ask them the same question: who do you hang out with the most? And so I do have a network of a lot of physician entrepreneurs, but I think if they only think their network can be physicians, they're shortchanging themselves. Or I see somebody that's, is coming in any other industry, let's say real estate, because a lot of people are trying to get into real estate. So who are your mentors? Who do you know that's actually gone to where you want to be? If they don't have anybody in their network that they could call up on the cell phone or email directly right now that could help them if they get stuck in a problem. Because if they did have that network, then nothing will really stop them. They might have like a little roadblock, which everybody in growing has a roadblock. But once you have that network, you can just call somebody that's been there, done that. They're like, yeah, Amir, I was there about 2 years ago. Call this guy, he'll get you through this. Call this marketing guy, he'll fix this. And even today, I was just talking to you. I want to have my own podcast studio set up too, right? And so you said, yeah, I'll hook you up with this person. I mean, this is just so easy. Like, I'm just moving so fluidly with my network of entrepreneurs and people that are focused on personal growth and delivering value to other people. So that's really a secret.
I love what you're saying. It actually is reminiscent of an organization that I used to be a part of, the Entrepreneurs Organization.
Okay, I've heard of them.
And it's great. There's 15,000 entrepreneurs that are a part of it. and they always break you up into these forums, these small groups that are 6 to 8 entrepreneurs, similar types of businesses, meaning service or manufacturing or real estate, but nobody does the exact same thing. Nobody's in competition with one another. And my biggest takeaway from it, and with meeting and getting to know all these entrepreneurs, is we all have our similar hurdles, problems, employee headaches.
Right.
And it's like, it doesn't matter what you're doing. We're all, as entrepreneurs, dealing with a lot of those same headaches. But then you're taking it one step further and saying, well, if you do or have people in your network that are farther in their journey in the particular area that you're targeting,
right,
they're there to help you get over those hurdles and problems that all entrepreneurs have and deal with as well.
Yeah, that's awesome. EO is a great organization. I remember when I was 21, I was part of Business Network International, which is a similar thing. You have a round table, everybody's in a different industry, so those are really, really good.
Absolutely love it. And, I know you're doing a little less anesthesia nowadays, and it's really because you've built a huge organization selling everything. And a lot of it is across the entire world. Could you tell us a little bit about kind of what you're doing and how you're accomplishing it today? Forget about the real estate. We'll talk about that. Forget about the venture capital funds that you're managing. But with your business, tell us about what you're doing.
I would say I started off like many people do. Let me just get a virtual assistant and outsource some tasks. And I think everybody needs to start that way. Just put their big foot in the water or the big toe in the water and just see what that's like, buying some of your time back. But then you go to the next level where you start outsourcing complete roles. Forget about tasks. Like it used to be, I used to outsource a few marketing tasks for my marketing company. Now complete roles are outsourced. COO is here. Digital advertising is here. Media buying is here. Organic marketing such as SEO and Google map hacking is another thing. So outsourcing roles was kind of forced me to grow the company faster. And so, when you're growing, two things you got to think about. First, do you even know enough to hire somebody? And so what I do, which is a little bit of a hack that I haven't seen a lot of people do, is talk to maybe 3 or 4 people. Let's say SEO, let's just say. Talk to 3 or 4 people, get their offering, and then talk to one person about what the other 3 are offering, and do that times 4, and you find all the weaknesses in everybody you're interviewing, because at one point I was not the expert at organic marketing or ads. So that's a good way to do HR and hire the right people. And then I have them create their own SOPs, standing operating procedures. Okay, so how are you going to do that? Just explain to me how you do that. And they talk for a little bit. I'm okay, put that down on a piece of paper, and we're hired. And then we keep on fine-tuning the SOP. So if I hire more and more people to do more of that same role, we're not reinventing the wheel. And that's when you could really scale a team quickly, because then it becomes plug and play, just like McDonald's, which, by the way, I worked at McDonald's when I was in high school, and I was pretty impressed with their system, because there's no way I could cook a hamburger wrong. You put the patty on there, it cooks on both sides at the same time. You pull this lever and it squashes the hamburger. The timer goes off in 25 seconds. It's the same hamburger every time. So in building teams, you want to have that type of level of system in place.
Can I ask you a little bit more about that? And now just to kind of get into the details with an SOP, the standard operating procedure, how do you go about developing it? Do you have somebody do it and then just write notes about what they're doing every step along the way? Do you do video SOPs? There's just so many different ways to accomplish it.
Right.
It sounds like you've done a great job of systematizing, and you have to systematize to scale, period.
Right.
What's been your process with that?
So I'll break that down to 2 steps. One is, how will you get, who is going to make the SOP, and then how it will be made. So if somebody's pretty good at what they do, I'm going to have them make their own. if I know more than them, but they're going to be a plug and play into my system, I'm going to write it myself, or we work together on it. And we're going to actually first write it down into steps. I just use a Word document. It's super simple. Step 1, 2, 3, or in some cases you want to build out like a flow chart. Now, different things will be better on paper, like steps 1 through 10, and other things are better with a video. So when I do my own SOPs, let's say I need somebody to log in, click on this, record this video, and then take notes. I'll just do it myself once on a video. Then I hand it to somebody and I'll say, you're in charge of this. You take all the notes on the video I just did. And you can even clip parts of the videos and turn them into hyperlinks if you need to refer to it. So the good thing with a video is so quick, like boom, you do it once, you're done. The benefit of having things on paper with screenshots, for example, instead of video, let's say 6 months from now, I'm on a mastermind. And they're like, yeah, that one thing we taught you, okay, now this is a different website you want to go to accomplish A, B, and C. Well, if you got a screenshot, it's really easy to replace a screenshot, but to replace a whole video, you got to get in front of the camera and do another screen record. So if you're going to have SOPs that you think are changing quickly, which happens in e-commerce a lot, it happens in digital marketing a lot, like every 6 months, there's a new, better way to do it, right? I'd rather have those on paper with screenshots than video. If it's something redundant that's not going to change for a while, I'll just do a video and call it a day.
In terms of having an SOP, and now you've built a fairly amazing team of 70, 80, 100 people or more, how do you manage all of those people and making sure they're actually following the SOPs?
Right, so that's kind of a tricky thing. I've done it 2 different ways. So the main way is I put in a COO, some operations guy. So on digital marketing, I got 1 point of contact. On e-commerce, I got 1 point of contact. For real estate, my brother's the 1 point of contact. And they got to handle the rest, and I help them with that. The SOPs definitely help. And there's actually some software out there where you can monitor their SOPs. And then once a week, we also do what's called a level 10 meeting, where each one of these departments that the COO is running, they need to give their weekly report. Okay, did you hit your key performance indicators? Did you put out this many ads? Did you get the ad cost down? Did you put up this many videos online? Did you create this many pieces of content? Like, what did you do? On the e-commerce side, did you go through this many products? How many did you analyze in a week? And what is that per hour? And now what am I paying that person per hour or per month? So you start breaking everything down into numbers that can be measured. And then I give that system that runs every department to the COO and said, this is what you're responsible for. It's just, you talk to me, you have other people report to you in numbers, and then once a week we're going to go over the numbers, and that's it. And I just get a bird's eye view of what some people call it the CEO dashboard, all these different names for it, but I just crunch everything into numbers. And if there's problems with the numbers, then I roll up my sleeves and I go in there with the CEO. It's like, hey, why did we drop the ball on this? Why haven't we raised $2 million this month? That was our goal. What happened? And then, we have a conversation about it. We tweak things. We talk to the people that are executing certain tasks. And, another key thing is I never blame any employee for anything. They're allowed to make mistakes. You have to give them the freedom to do that.
You just nailed a super important thing about entrepreneurship, and something I really want to emphasize for everybody that's watching or listening. It's never your employee's fault. Right. The responsibility rests on the entrepreneur. Right. Because if something goes wrong, guess who has to fix it? If something really goes wrong, guess whose problem it is?
Exactly. So I think when you're building a massive team, if you don't have that culture and these people are afraid of failing, you're not going to get the best performance. And number 2, when you build this idea that it's not the employee's fault, there might be a fault in the system. And of course, I created the system, so it's my problem, right? There's a problem in a system. Now we could work collaboratively with the employees. And we're like, okay, well, this didn't work last week. So Bob, what do you think we should do? And I let them come up with their own solutions. There's less thinking on my part, and they're like in the trenches, right? So
Let me share with you a decision-making strategy that we use that I don't think a lot of people do use it. We call it the 1-3-1.
okay,
And anytime there's a problem, one problem, have the employee come up with 3 potential solutions and their one recommendation. One problem, 3 solutions, one recommendation. And ultimately, at the end of the day, the manager, the entrepreneur, we have to make the decision, but it's for the employees, getting them involved with that decision-making process, but also not just like, well, what's the one solution, forcing them or asking them to put a little bit more creativity into it. Right. What makes sense? What options are there? And ultimately, what's best? And I've definitely found that as we've implemented this, at first, there's a lot more talking about the solutions, talking about what really makes the most sense. But more and more, I'm trusting them, and the people that are able to really sell, this is the best way to do it consistently. I'm also learning to have that trust in them to just be a little bit more autonomous, make their own decisions themselves. So just sharing a little strategy that we use in our own organization.
Yeah, that makes a lot of sense because, at the end of the day, as a business owner, you don't always want to be involved on the smaller tasks and decision-making because you're going to lose the big picture, which if you are the CEO, you're the visionary of your own business, then you need to stay as high level as possible. So I'm wondering, since you've been doing this 1-3-1 rule, is there some way you could guesstimate, like, what percentage of the time do these people figure out the problem, the solution for the problem on their own without you putting in a lot of input?
It's 100% of the time. Just the decision may change after we talk about it.
Got it.
But you would definitely find it's like a learning and growing process, both with the management and learning to just trust the decisions of the employees, and the employees having the empowerment of not just saying, I have a problem, what's my solution, and asking somebody else to solve it for them. Right. Now they're forced to actually think about issues, think about solutions, and then come to management with, here's a problem, I've thought about potential solutions, here's what I'm recommending. And it's kind of an ongoing process that they gain the confidence to make those decisions and recommendations, and management gaining the confidence to trust that they're doing the right thing.
Yeah, that makes a lot of sense.
So it's definitely been very helpful within our own organization. Sure. So let me ask you this. You have 70, 80 people across the world. I know a lot of them are in India or Pakistan, and obviously big reason, you save a ton of money. Some fears, let me just play devil's advocate for what people that are listening are thinking when this comes up. And let's start with the quality. Do you feel like you're getting the same level of quality that you would expect from anybody that is international, virtual assistants, as if you had somebody hired here locally?
So that's going to depend on the task. I think definitely anything that involves a high level of communication over the phone, I don't know if I would go with Pakistan or India first, but Philippines and Mexico, I do have people there. So they're the front lines on the phone. Now, anything software related or marketing related, I'm really liking India and Pakistan, especially India. Especially anything software related. I mean, if you look at whatever the top 10, 20 tech companies are in the U.S., I think like 80% of the CEOs are from India right now. So it's kind of almost like in their blood, or maybe in school, they just train them on this mindset, almost to think like an engineer when it comes to either software development or marketing. And some things are just, hey, can you use a tool? I just don't want to log into a software and input the data. So if something data entry, I'm going to get the same input, maybe more out of them than somebody in the U.S. And they're also more likely to follow my rules. Somebody in the U.S. probably look at their social media every 10 minutes. It's going to be kind of hard, right? So over there, these people I feel have been very loyal, more loyal than anybody that I've really have hired in the U.S. for the most part. So you really have to break it down into tasks. If it's more technical in nature, do you need that English proficiency or not? Is it software related, marketing related? Is some people, like for example, have call centers in Pakistan. Maybe that's good, maybe not. I don't know. So I haven't tested that out, but based on what you're trying to do, you should test it out and see if it makes sense or not, and then look at the value that you're getting for the cost.
Okay. So I know personally, and I've got, 6 or 7 VAs, different social media support, et cetera, that are international. We hired ours through like Upwork or Freelancer or some of these other websites that are out there, but I'm doing it on a small scale. For you, really ramping it up internationally, are you doing the same thing, or have you used different strategies to build your team?
So for most of my team, I didn't use Upwork at all or any of those online platforms. So now maybe I might have met 1 or 2 heavy hitters years ago, but now that I have boots on the ground, they've been employees and now COOs, they can do HR in that country. And so they could go to universities, like both the CEOs that I have in India and Pakistan, they speak at universities about how they're helping grow an American company, which makes them keynote speaker. And we're getting people with MBAs joining for a fraction of the price that you would think. Like you wouldn't even believe me if I told you the price. So literally we're getting the best talent directly from universities. And there's so many people that don't go on Upwork and they don't go on Fiverr and things like that. They want to work in an office in the country that they live in, and their boss is somebody in that country. So I don't even talk to these guys. They almost see me as just like a founder, visionary guy, and the real business is in that country. That's led to really good HR. And now that my CEOs are influencers in their niche and have a following, if we need any other person, they can just go on Facebook. For example, the CEO of my e-commerce consultancy company, he has like 70-something thousand followers. We need anything. He just says, hey guys, I need this. And people are willing to help for free and give recommendations. So literally HR can be done in 12 hours. Just wait for 12 hours of posts and resumes come in with one single post on a Facebook platform.
That is absolutely amazing. When it comes to these SOPs and creating a scalable system, are you finding that they're just as good as somebody here in the United States at kind of running the systems and making sure that what needs to happen actually is happening?
My experience has actually been better. So actually the culture of my business is everybody is basically 24/7, or the top guys are 24/7, and they love what they do, and they love personal growth, which makes them a good fit for that role. Right. So other people underneath them, maybe they do 40, 50 hours a week and go home. I don't really care as long as the job gets done. But because that culture, I think we're getting really good output from them, at least on the marketing side. I mean, my competition are people in the U.S. and we crush them. So for example, we have over 20 clients that we market for clinics and medical spas. We're always number 1 in any city, no matter what. And we have at least 20 competitors per industry in that zip code, and we're always number 1, maybe number 2, depending on that Google algorithm changes, it gets swapped, but we're usually number 1 for like a fraction of the price because we have such solid SOPs, and these guys are relentless. Like they want to win. They're motivated by winning, not even by money anymore. They just want to be number 1. And so I think because I have that culture where we don't have really much competition in the U.S., even though it's an off-source team.
That's amazing. And I know one of the biggest businesses that you've been scaling and operating lately has been selling stuff on Amazon. I'd love to, with your own stores, with kind of the different strategies to make that happen. Fulfillment by Amazon, having Amazon stores and selling that way, it's kind of big news in the markets right now. Could you share a little bit about what you're doing? You don't need to give away any secret sauce.
Right. So when I didn't get into medical school the first time I applied, I was relying on my eBay store wholesaling supplements and also basically doing like an online arbitrage with luxury clothing. So that because I want to get luxury clothing for cheap for myself, and I was taking a lot of those supplements. So I'm like, well, let me buy in bulk. I'll keep some for myself and sell the rest. And I was getting 50, 70% profit margins and making up to $5,000 a month all through medical school and residency. Now, fast forward, how do I scale that and get off of eBay and go on Amazon? Because I don't have those vendor relationships. So the first year definitely was difficult. They're like, who are you? But in the wholesale model, which everybody's pretty much familiar with wholesale, you're buying directly from suppliers or distributors, and you're going to get a certain amount of profit margin. Industry is probably, 8%. So we maybe started there. But eventually, as you build relationships and get more volume, becomes, 15, 20, 25% profit margins, pretty much like on a monthly or 8-week basis. So, how did I scale that up? One hack that I had is I started with an influencer in the e-commerce space that already had his mini team in the private label space. So he had a team going, and I just took over the team from day one. Okay. And then I taught them how to basically modify what they were doing for the wholesale space. So it was really easy transition. And we already had a mini army of like 6 people from day one. And basically they fired all their clients, and I'm their only client. So that was a little bit of a hack. You'll just take over a whole mini agency in another country. It's not out of the realm of possibility. And that saved me probably 2 years.
You know what? We do a lot of M&A work, mergers and acquisitions, and helping, entrepreneurs, deal makers actually buy businesses.
Yes.
And, there's a few different strategies. One way is, you can buy a bunch of businesses in the same industry, and all of a sudden you've got a bigger business. Bigger businesses actually are worth more. Right. The other strategy is to get into new industries or to grow horizontally by acquiring businesses that are complementary to what you're doing, right. Which sounds like exactly what you were able to accomplish with, hey, I need marketing. Guess what? I'll go buy a marketing agency. Oh, I'm going to go sell on Amazon. I'm going to go buy an agency that does exactly that, right. And continue to scale. That's absolutely such a brilliant way to go about it.
Yeah, and it made a lot of sense. And both of us didn't know that down the road, understanding private label and wholesale, understanding that private label aspect all the way back to the manufacturer helps us negotiate wholesale contracts. Because when a vendor's like, yeah, I'll sell you this Barbie doll for $10. I'm like, wait a second. I know you guys get it manufactured in this city in China, and your cost is this. And I know the numbers because the private label team already has the manufacturing contacts. Whereas as solely a wholesaler, I would not even think to do that. So then vice versa, when we get the wholesale contracts, we help their brand because we do the private label side where we build brands from scratch. We give them tips on how to optimize their performance on Amazon to make them get more market share. Well, the more market share they get, the more volume I get as a wholesaler. And then a lot of times we're able to negotiate an exclusive contract where now I take over the whole company's wholesale. I'm the exclusive wholesaler on Amazon, and I split it up over 10 stores online. And then, of course, margins go up and we control the price, but almost like a monopoly online, but I'm not going to say the word monopoly, but we at least are controlling the price because we have everything under our control.
That is absolutely amazing. So, and I know you're still doing investment projects. We're still helping you develop new investment opportunities, new funds, kind of everything across the board. But since we've been talking Amazon, and I don't know if you want to share or can share, is there any way for anybody else to actually get on board to work with you, to profit, to benefit from the business that you are obviously very successfully ramping up?
I just look to see what type of products could I create that the market is asking for. So in the investment space, plenty of people doing real estate, and they're thinking, oh, this is passive income. I'm going to pull back from my physician work. but at 4-6% preferred return, not really. For a 6-figure check, you may be getting a free dinner once a month is basically what it boils down to. So what could I do and what could I create to give higher cash flow? And so since we've been mining data from suppliers, we know what suppliers have the highest profit margin. Let's say there's some people out there with 40-50% profit margin. They really are. Like Barbie, for example, probably has that. And they're not going to give me the contract because the relationships are so deep. But my team analyzed the numbers. So I was thinking, well, this is a cash flow opportunity because let me go in there. And since I can see who's selling on Amazon these high profit margin things, it's not me because I'm not allowed to because I wasn't here 10 years ago asking. What if we could factor their products into almost like a hard money lending fund, but to the Amazon sellers? And so I looked in the market, there's only like 15, 16 people doing this where they underwrite the product and not the borrower. So we figured market rate will start at like 3 or 4% a month, or basically we buy the inventory and if they sell in a month, we mark it up 3 or 4%. Well, that turns into basically 36% a year on the lower end, and we give half of that to investors as a pref. So I think right now I have the highest preferred returns in the nation at 18%, which I know some other people told me to bring it down. I'm overpaying investors, but
well, you're definitely overpaying investors.
Yeah, but the response has been really good because people are really happy with the returns. I've gotten more referrals from this fund from anybody else. I never even had a pitch deck. I have like a 2-page explainer. It's so easy, and the arbitrage has no correlation to the stock market, no correlation to today's floating interest rate bouncing up and down. It's literally just getting a spread off of somebody else's margins, and they're always going to have those margins.
That is absolutely phenomenal. We'll put your information and the fund opportunity information available for anybody that actually wants to follow up with you on this. So that just to repeat, to be able to participate in your Amazon store operations, you're actually offering a preferred return. That means before you're taking profits, right, you're paying returns to the investors of 18% per year right now.
Yes.
Where do I sign up?
LiveCapital.com or send me a text message.
All right. Well, since you mentioned it, and we will include the information in the notes to the show, Baloch Capital, Amir Baloch, this is your baby, which you grew and expanded with. And I know personally from all of the stuff that we've done well over a dozen years, you've been involved with a lot. We're just talking about your own venture right now, but I know you're really active in kind of the pre-IPO space.
Right.
Could you share a little bit about what you're looking at or what you're seeing in the markets in investing in other companies before they've actually gone public?
Right. So we use the term pre-IPO a lot. Really, it's just pre-acquisition, but that's a lot of syllables, so I just say pre-IPO. But we are targeting companies that plan on exiting in 2 to 3 years. And this was, again, just feedback from the market. So we previously had 2 biotech funds with returns more than double the industry average annualized. But the biggest complaint was, Amir, I need some more liquidity. I want a faster turn on my money. So, in private equity, when you're doing venture, especially, which is the early stage, some people might wait 7-10 years before they get a check. So that was the only complaint that I got. So now I've responded to the market with my pre-IPO fund. Company's projection is to exit in 2 to 3 years. And the structure is all the LPs get their money back first before there's any profit share on the back end. And that depends on how much people invest in. The profit sharing on the back end is different. So now I really had to, and because my deal flow is greater now than it was 5 years ago or 10 years ago, we can really cherry pick these things. And I had this in the back of my mind even 5 years ago, but I wanted to wait till there was a value reset in the private equity market. So A lot of people just a few years ago, they saw the hype with the SPACs and companies going public. In fact, I think we had record number of IPOs just a few years ago in the history of IPOs.
Let me tell you this because it was really funny. Completely true. Record number of IPOs, SPACs, which a special acquisition company has no business plan other than to go public and then buy something else. And they were doing amazing. This is how like Trump's Truth Social went public. Other companies were going public. I actually went to this SPAC conference right after kind of they started losing their shine, started being a little less attractive. And it was like a funeral at this conference as speaker after speaker got up and talked about the wonderful times that have been experienced and the death of the market that's going on. And I don't think it's come back. I don't know if it ever will come back to the days of what it was doing. But I love, we call them blank checks. Being able to raise capital, create a general plan. Hey, we're going to go buy a company in this industry, in this area. We just don't know what it is yet.
Right.
Easier to go public, easier to get out there into the world. Where the industry kind of fell apart is during the heyday. You get all of these investments, but once you get the actual target that you're going to acquire, you have to go back to the investors and say, now this is what we're buying. Are you okay with this, or do you want your money back? Right. During the heyday, 90% of the investors would say, I'm in, let's go.
Okay.
The death happened when that went from 90% of the investors saying, I love it, let's go, to 10 to 15% of the investors saying, I'm in for the ride. Everybody else said, nah, just give me my money back.
Right.
And as soon as that started happening, SPACs ended as an attractive investment vehicle. So a little bit of a deeper dive into something that really was amazing a few years ago.
Yeah.
It's just not very functional today.
And there's a deeper lesson in there too. And so I've learned from my own personal experience, when something gets too hot, that really builds up the FOMO. So imagine crypto in 2017, even amateurs put in money, were getting like 500% returns, right? You knew nothing. You're like, wow, this is so easy. I'll put in money, get 500% return. But when that's happening, you probably have reached the peak of the market. So you had to really subdue this FOMO, which I did not do in 2017, 2018. I was like, I got to catch this wave. So I put in money, and then the next year in 2018, 83% drop in Bitcoin, right? So I learned then, years ago, when too many people are chasing after an industry asset class, instead of zigging with them, I got to zag somewhere else. And I did that in multifamily in 2019 when cap rates and interest rates were the lowest. And so if people listening out there know, if cap rates are the lowest and interest rates are the lowest, you could basically sell at the highest price. So if you can sell at the highest price, you should be selling, not thinking about buying. So I sold everything in 2019 and 2020. I owned zero real estate by 2020, just waiting for a correction to happen. And I think maybe COVID might have delayed that correction, but we are seeing it now in 2022, 2023. Likewise for private equity. Why did I launch this year? I saw the SPACs, I saw the IPOs. I really wanted to jump in. In fact, I met with people local in Dallas that are putting together biotech SPACs. I'm like, oh my God, this is my dream, right? And then I kept on talking and trying to understand it. And then I remember the cap rates being low. I sold the real estate, which was, I think, a pretty good move, at least for my personal portfolio. I remember the crypto experience. I'm like, I need to learn from those two things, and I need to wait. So I waited. And what some people don't know is the private markets usually trail the public markets by about 6-9 months. So when I saw the correction in the public markets, to 2022, I think they were down 20% or so. I'm like, okay, now I need to launch my private equity. And so, of course, it takes a couple of months to get things organized, get my deal flow. We launched the fund this year. We're coming in at values that are a fifth or a third of what they were last year, and the companies are further along. Nothing wrong fundamentally with these companies. We're getting a little bit of a value reset, and we're able to negotiate 100% warrants. I've got 2 board seats already. So this is really, really good. This is probably going to be my top performing fund. And it's a combination of all the extra deal flow that I've had by getting in the private equity space in 2015, plus learning about not to chase the hottest thing. Like, for example, if somebody at dinner is not even in the investment space, they're talking about how they're going to buy a certain private equity company, I definitely do not want that. That's too hot if it just, an average non-investor type person is wanting to buy it.
I love what you're talking about. If everybody's doing it, quit doing it.
Exactly. That just makes sense. And, for example, we were talking about Grant Cardone, they're rolling up HVACs.
Yep.
We say about HVACs. Let's roll up some funeral homes. I don't know who's doing that. I'm just thinking off the top of my head. Where are people not?
Funeral homes used to be a huge roll-up opportunity because they were such massive cash flow. Yeah, no, private equity has already gone through the funeral homes and corporatized a huge percentage of it because they were high cash flowing business. HVAC companies, high cash flowing business. Roofing companies, high cash flowing business. It's only a matter of minutes before Amazon stores.
Right. And actually, we saw uptick. Speaking of Amazon stores and private equity, I wanted to do aggregator, but I saw the multiples going up, from 2x to 2.5 to 3, and now 4x for me to buy. Well, if the multiples are high, instead of buying, I'd rather build. So we're building when the multiples are high. And now the multiples are actually coming down just in general because people are scared of everything investing related, right? So multiples come down to 2. Like, I have something on the table right now. I could buy it at 1.5x. It's a small deal. I might just take it down myself. But 2 years ago, this was not the case when the e-commerce aggregators were on the loose and drove the price up.
Can I tell you some secret numbers of like doing exactly what you're talking about successfully? All right, here's one of those hacks of how to leverage M&A to become, the next billionaire. And the reason why all of these aggregators are out there and the private equity is out there, and it comes to the price to earnings, price to profit, price to EBITDA, whatever you want to call it, to buy a company that is owner operated. It's generally a 2 to 2.5 times the annual earnings to the price. And that's usually the smaller companies, owner operated. Now, if you can build it to a point, or if you can install the professional management, that 2.5 times price to earnings jumps up to about 4 to 5% price to earnings. Fantastic. You just almost doubled the value based on just making it a little bit more passive. Good. Next step, private equity. So private equity will buy, they'll pay 8 to 10 times price to earnings multiple, but they want to see higher profitability. They want a minimum of $2 million per year in profits. Really, most guys I know that are out there hunting are looking for $5 million a year in profits. That's being accomplished by acquiring these passive ownerships at 4x. You put enough together to create that annual profit. Now you can sell it to private equity for 10 times. You've doubled the value already. Private equity, they've got one game. Whatever quick improvements they can do, and then take that sucker public. Because if you've got $5 million in profits, you're generally big enough to be able to take it public, at least on some pink sheets, or you're starting to get close to be able to be on some of the various NASDAQs, stock exchanges. Now you're talking about 20 to 30x valuations of the companies. So it's like what you're talking about then, of the ability to buy these smaller owner-operated businesses, just acquiring companies and going from the 2x price to earnings to the 4x price to earnings to the 8x price to earnings to the 20x price to earnings. And it all comes from just buying, acquiring, and scaling the businesses to hit these benchmarks that make you attractive targets for other buyers.
Yeah, that makes a lot of sense. I remember I was taking this course by Harvard, and the professor was talking about the different stages of private equity, where it goes venture, then the Series A through whatever, and then the leverage buyouts. And then once somebody gets to this later stage, they go after the arbitrage going from private to the public market. So that really makes a lot of sense. So basically everything you said explained everything to everybody out there, because most people don't know that at all. I think 99.9% of people don't know that that's why people do it. I didn't even know that until a few years ago, when people were out here trying to buy physician practices. I'm like, why are you buying these practices? Like, well, and then they explained it at a superficial level. I'm like, so you're saying you just buy a bunch of doctors' practices and package them up, and all of a sudden it's worth more? And like, that concept was new to me like 5-6 years ago. So,
and then people think, oh, private equity, you're idiots, you're overpaying for it. But no, they're getting the quickest turnaround for buy it, publicly list it, profit.
Exactly.
1, 2, 3.
Right. That's pretty awesome. Like in our private equity group, we plan on these people exiting, but maybe exiting and still in the private space. And a couple of criteria that I have is there an exit buyer already identified? Is somebody that's got connections to the exit buyer on our board or in our network or in my network, which a lot of times it is? What value can I add other than writing a 7-figure check? And so the place where I have board seats at, we can actually grow these people to unicorns, like with a couple phone calls actually. And a lot of them are more in the software, digital business or platform business, because if I want to respond to my investor market, they want the quick in and out. What scales faster than something that's digital? So majority of our companies, actually all the companies right now except for one, is a digital platform or a digital software company, something like that. So scalability is faster, exits are quick in and out, just hit the KPIs, we're in and out in 2 to 3 years. That's what we're thinking. So I was not ready for that, but doing the research, that's what I found. In fact, I might just stick with this for now on. Like, it's such a fast in and out. Like, I just love it. That's why I think this could be the best performing fund by far out of anything I've ever done.
Phenomenal. Again, just go to baluchcapital.com or reach out to you. Let's just make it easy. What's the best phone number to talk to Amir?
If you want, you could text me at 469-480-3380. baluchcapital.com, BALUCH capital. And there's a couple of different ways you get a hold of me on there. Or I check my LinkedIn pretty regularly as well. So if you just look up my name on there, I'm one of, I can't imagine there being too many Amir Baloches in Dallas, Texas, but I'm probably the only one.
I think. And if there is, you're the only anesthesiologist.
Right. There you go.
Well, with the last few seconds we have, is there anything that you'd like to share or talk about? And then we can go ahead and have a good time.
Well, if you're an entrepreneur out there and you're trying to learn, definitely never stop learning. Learn from people that have been there, done that. I mean, Nate has interacted with, I don't know how many businesses. It's literally over 1,000 business owners by now, 1,000. And when you learn from podcasts like this, or somebody wants to talk to me about something specific in healthcare, you're taking decades of experience and knowledge, and you could cut it down to a few hours. That might be one of the biggest hacks out there for growth. So just keep that in mind and never stop growing your network and listening to podcast educational materials, and don't be afraid to make mistakes.
I love it. Well, there you go. from honestly one of the best entrepreneurs just in all the different facets that I've known. Thank you so much for listening to this episode of And This Is Why, where we dove in really deep with Amir Baloch into how he's built his own business and organization across the world, scaling it, but taking it a step back we started out just doing real estate deals. Writings on the wall, goes to build his own business, goes on to private equity, the pre-IPO ventures. And you know what? He's still growing, building, scaling, and making it happen. So thank you for learning a little bit more. Definitely looking forward to seeing you, hearing you, and talking on the next episode of And This Is Why.